Well, what's the latest around the mortgage world? We got an update with Bill Litton of Cross Country Mortgage coming up for May. Bill, so good to see you again. I know still a lot happening in the world, right? I mean, it seems like the news and headlines never stop, but I want to kind of catch up. We do every single month on kind of what's going on in your world as a mortgage lender, and for home buyers that are out in the market. I know it's a busy time for people that are looking for a home, kind of what to expect. So, what's on your radar, kind of top of mind right now, heading into May?
Well, market-wise, interest rates are pretty important, and also it's important to understand when rates can be a problem and when interest rates are really not a problem. So, where the market has gone in the last 30 days is rates have cooled down and come back just a little bit from where they were. Okay, so mid-March, rates were spiking over 6.5%. If you go back a year ago, we were over 6.8%. So as of today, we're lower than both a month ago or a year ago. We're roughly at about 6.3%. Remember, that depends on credit and income and some unique factors for the specific borrower, probably paying a little bit in discount as well. But trending back towards 6.3%. Rates spiked due to the conflict in the Middle East, but with a ceasefire and things calming just a bit there. Now, we don't have any certainty, but just the ceasefire and cooler heads prevailing has allowed rates to come back down just a little bit.
Okay, so some good news there. I know people are hoping to kind of move closer into the fives in a lot of cases, but still kind of hanging around mid sixes, but still a steady, still better, when you keep that perspective, as you point out, even a year ago, we're kind of in better shape. So what else? I know that obviously a lot of the stuff in the Middle East impacting this. What about here domestically, Bill? Kind of what are you keeping your eye on?
Well, here domestically, we're looking at, of course, inflation, which is certainly oil prices spiking would absolutely have some pressure on inflation, which is why interest rates spiked up. But, overall, inflationary concerns have been quelled as compared to 2 or 3 years ago, which pushed rates into the 7% range. So as long as the economy keeps chugging along as it has been, without the fear of a serious inflationary concern, we do believe the very short term issue was rates spiked up over 6.5%. In the mid to longer term, with the emphasis from this administration and any future administrations and the Fed wanting to keep inflation low, we do believe that the interest rate outlook tends to be lower in the 5%, maybe even, 2-3 years out in the high 4% range. So that's what we're looking at, is especially when you're looking at mortgage planning. If you get into a house today and you're at 6.3%, there's a good chance you're going to have an opportunity to refinance into the 5% range. Now, I do get the question a lot, when are we going to get back to the threes? And there is no indication. Nobody's pushing for that. There is no advantage, economically as a country, as an industry. Usually when you're in the 3% range or lower, it's because there is some financial crisis like in 2008 or global pandemic as in 2020. And now we're supporting the housing market by buying bonds, government intervention, quantitative easing, which we really don't want that. That's not a good situation.
Well, where do you think we're headed then, Bill? I mean, do you think we're kind of staying in this range? We kind of found a range maybe that we'll stay in for an extended period of time here. I mean, is there anything that might move it up or down significantly?
Well, of course, if the Strait of Hormuz issue is not resolved, and if this, conflict in the Middle East continues to, drone on and it's not resolved, or if it flares up, that could put rates in a negative position to go higher. If we can maintain a ceasefire or come to some kind of an agreement that ends the conflict, I think that will cause rates to go lower in the short term. So we need to see how that plays out. there's a lot riding on that specific situation.
And again, for those that are, considering, hey, do I go ahead and get pre-approved or do I go ahead and lock in a rate right now? Yeah, it's still okay to do that, right? Even if you are worried about or hoping that rates come down a little bit more because they have ticked up here maybe the last month or so, it's still okay to go ahead and lock in because, things could change in the other direction too.
Well, yeah, and Ben, if you're waiting to time the market for an interest rate, then that's not really good advice. Timing markets, Warren Buffett is famous for saying that he couldn't time the market. If he can't time it, then, I would challenge anybody to say that they could time it and prove that they could time it. So it's not about timing the market. It's about time in the market. And if you look at, the cost of waiting, we do these studies for customers a lot and say, what would the cost be if you waited a year or two for rates to go from 6.5 to 6? You're going to get a lower rate theoretically, right? You might not ever get that lower rate, but let's assume you did get that lower rate in 2 years. Well, now the cost of the house went up enough that it's actually more expensive with the lower interest rate. So if you can't afford anything and the numbers don't work in your budget and you have to have a lower rate for that to work, for a payment to work in your budget, then absolutely, it might not be time to buy. Most people, I'm trying to make the best financial decision, which I love that, but let's look at all the factors. And there's a little bit more to consider. And we got to go just a little bit deeper than the difference between, 6.5% and 6%, or even 7% and 6%. If you've been waiting over the last few years, house values have gone up pretty dramatically in our area. It erases all the value of that 6% interest rate and the waiting for that rate.
Of course, you're located in Chaddsford, Pennsylvania. How has the market been around you, Bill? Kind of what have you seen in terms of interest from home buyers that are, okay with kind of where the rates are? Maybe is it picking up a little bit? Kind of what have you seen just in general?
Our market in the Delaware County and Chester County area is very strong. It is always, since I've been doing this, since May of 2002, this area has been very resilient, even through the Great Recession. So we see values continuing to increase over time. I will tell you that anybody that we've talked to who's bought a house, even if the rate was 7%, was glad that they did that because as values continued to increase, they're enjoying the appreciation.
All right, very good. Well, again, if you have questions for Bill, best thing you do is just reach out to Mortgage Lender, right? Start talking about what options are available, kind of look at what things might look like for you. What can you do maybe to improve your situation going forward? You can do all that by just texting the word LEND, L-E-N-D, to 21,000 to get on Bill's schedule. There at Cross Country Mortgage. You can find more as well online at smartmortgageshow.com. All right, the update for May. I know we're heading into summer, Bill, so looking forward to catching up with you in a month to find out kind of what's changed, if anything at all, and kind of get a sense of what you're seeing. So appreciate the insight as always.
Absolutely. Thanks so much for joining us.
This program is for informational purposes only. Please consult a qualified professional before taking any action. Bill Litton is a loan advisor and regional president with Cross Country Mortgage, NMLS number 147060.